In this video, we are going to discuss about financial management real-time example. So, what are the basic 3 steps we have in financial management? The basic 3 steps are budgeting, accounting and charging. Here, we consider a internet service provider company by the name, example Sonytel. So, Sonytel will process its budgeting, accounting and charging. So, in budgeting, they do process of predicting and controlling the income and expenditure of money within the organization. That means they plan, predict and control the income what they get through shares. So, Sonytel will be planning about the income and also predicting and controlling the income what it gets in this prediction, and also expenditure of money within the organization. So, what are the expenditures we put in, so that inside the organization how the money is flowing. So, the Sonytel also consists of periodic negotiation cycle to set budgets, monthly monitoring and current budgets. Also they consist of periodic negotiations. So, the Sonytel will do periodic negotiations on the yearly budgets or monthly monitoring and also about the current budgets activities also. So, under budget it will plan for the budget and also it will keep its predictions and also how to control it also. It will take proper predictions also will be properly processed here. When you come to accounting here, you can see the Sonytel will enables the IT organization to account fully for how money is used or spent on the services provided to the customers and also to the activities. So, Sonytel will clearly process that, and this is the process Sonytel uses to enable the IT organization to account fully for how money is spent. So, accounting, that means ledgers or separate billing, everything will be accountable here in accounting, and proper documents should be maintained here, so that Sonytel can be in the financial management after budgeting, the accounting also should be maintained very clearly, so that the proper ledgers, systems and also charts and accounts journals are also maintained, and it should be must maintain, because in their audit they can see very clearly that how the budget is planned, how the accountable, that means how the money is used and where it is used also will be available here. And also you can see this can be overseen only by some accountancy trained, that means chartered accountants will be very responsible in giving the accounts very clearly in the financial management of a Sonytel. And also you can see clearly charging, how are they charged for their services. So, charging is a process required to bill customer for services they consume and also requires sound accountancy practices and systems. That means charging is done to each client. So, if you take Sonytel is providing internet service to ABC company, it might also provide to BCD company and XYZ company and also RFQ company. So, entirely they charge their customers based on the services the customers consume. So, ABC might take only if you take X rupees and BCD will take Y rupees. So, they are charged according to the services what they consume. So, Sonytel what before providing services they do budgeting, and in budgeting they actually predict and control the expenditure what they get into the company, and after that they do accounts. So, they follow each and every steps what the CA or chartered accountant will be giving them as a guidelines, and they prepare proper accounts for all the services, or they prepare proper accounts for what are the services incurred in or what are the expenses incurred in customer services before planning a budget. And also about charging, so they charge their customers accordingly what the services they consume. So, here as we took example of a Sonytel, Sonytel will as a company of IT organization they will be doing all these 3 processes, so that they will be not falling under losses and might fall under profit here. So, these are the 3 steps and basic steps in financial management.